The January inflation numbers will be released shortly by the Bureau of Statistics. Let's bring in our business reporter, Edward Boyd. Hi, Ed. Annual rate of inflation is expected to fall to 3.7% from 3.8%.
That's what the expectation was. Unfortunately, inflation has remained flat at 3.8%, so it's a little bit higher than expected during the month of January. Also, the trim mean, the figure the Reserve Bank looks at closely, that actually lifted to 3.4%, up from 3.3%. So just having a look here at the media release from the Bureau of Stats, it says the 3.8% annual CPI inflation to January was unchanged from December. The largest contributor to annual inflation in January was housing, up 6.8%. That obviously includes rental costs. This was followed by food and non-alcoholic beverages, up 3.1%, and recreation and culture, which rose 3.7%. Recreation and culture includes holiday travel, things like that, things Australians were doing during the month of January. It says here when prices for some items change significantly, measures of underlying inflation like the trim mean can give more insights into how inflation is trending. Trim mean inflation, as I said, was 3.4 in the 12 months to January, up from 3.3. So this is a bit of a concern here, I'd say, for the Reserve Bank. They say the housing costs were up 6.8%. This includes rises in price for electricity, new dwellings and rents. Electricity costs specifically rose 32.2% in the 12 months to January, up from 21.5% in the 12 months to December. The increase in electricity costs over the year is mostly related to households using up both the extended Commonwealth Energy Bill Relief Fund and various state government rebates. So electricity costs clearly surging with those government rebates coming off. Here's a look at some of the big price categories. You can see food and beverages up 3.1% over that 12-month period. Housing costs rose almost 7%, and we've talked about electricity and rents in that. Health costs were up 3.2%. Education costs obviously rise regularly each year. They were stable at 5.4%. And recreation costs, which is obviously holiday travel, because it was the month of January where a lot of people do go overseas or travel interstate, that was up 3.7%. So you've got headline inflation lay at 3.8, the same as the previous month, but the key figure here is the trim mean, which has actually lifted slightly to 3.4% from 3.3.
So given that means core inflation is actually quite sticky and higher than expected, what's the RBA going to do with this when it meets in 2.5 weeks?
The RBA is going to be clearly a bit worried about this. They've talked already at the earlier press conference at the start of this month when they raised rates for the first time this year that they're worried about inflation being sticky, particularly in the second half of last year. You can see here the rate increase odds. Now, before the data came out, there was a 77% chance of a hold at next month's meeting, which is in about 2.5 weeks' time. That hasn't really changed, but market pricing is expecting rates to rise later this year. So this is obviously for the March decision. We might be able to show you potential outlook for later in the year. Here's the stock market. It was basically up 0.6% before these numbers were released. It's staying stable after the numbers have released. So there's not really too much change there from investors, but you can see the Aussie dollar has actually popped a little bit off the back of these figures. It's approaching 71 US cents. But clearly the Reserve Bank is worried about inflation rising in the second half of last year. Governor Bullock spoke about it in detail at the previous press conference. Expect her to speak about it again in 2.5 weeks' time. There's obviously the unemployment rate remaining quite low, around the 4.1% mark, which is causing some difficulties for economic modelling and for the RBA figuring out where rates need to go. But I think the overall consensus is interest rates currently need to go a little bit higher, especially with core inflation, as you say, or trim mean inflation rising in January to 3.4%. The RBA obviously needs to keep inflation between 2% and 3%, and they're not expected to get there until roughly the middle of next year.
On a related subject, Ed, a supermarket chain Woolies saying average prices fell by 0.5% in the first 6 months of the financial year.
Yeah,
doesn't feel like it.
Doesn't feel like it, particularly people that are shopping regularly. Their weekly shop is obviously what's measured in the CPI index, so this ties in pretty nicely. But you can see Woolworths sales results here. The group sales on the top of the screen includes New Zealand. They were up 3.4% to about 37 billion. Australian food sales, the fourth line on that chart, up to almost 28 billion. And if we go to the next page, they don't provide a lot of detail around prices, but they said average prices excluding tobacco fell by 0.5% over that 6-month period. They did say, though, that dairy, beef and lamb prices increased, but there was deflation within their supermarket pricing across fruit and vegetables due to more supply of fruit and vegetables coming into the market. So just quickly show you the Woolworths shares off the back of these profit results released this morning. They're up 9.5%. They were up 10% about 5 minutes ago. So the stock market clearly liking what Woolworths has said today, but prices down 0.5%. It doesn't sound like much, but it is a start, but it really does not feel like it when you're doing your weekly shop.
Thanks so much for that, Ed.